Thanks so much for joining us. I'm Marlin Bohling, and we are getting knee-deep now into our trading day, and things are kind of changing around a little bit. We'll get you updated on quotes and bring in a little extra expert help in the form of Chris Swift. He joins us from Swift Trading in Nashville. All right, Chris, good to have you come in.
Good morning.
We have a little weakness in the markets, and that was kind of expected, I guess, overnight with all the rain taking place. However, I noticed July soybeans, we had that export sale.
Yep, I saw
announced
that
this morning. 456,000 tons of beans that were sold, part of it to China, about 2/3 of it, part of it unknown. Could be China, we don't know. Anyway, this is how we're shaping up. We'll start with the corn market here and get you updated on our current quote. So corn right now is 9 lower on July. We're at 646 1/4 per bushel. December now down 13.5 cents at 552 3/4 per bushel. Soybeans have really been kind of jumping around here today. Let's take a look at July. Well, look at that. There's a plus sign now. 1/4 cent higher is all, just one tick higher at 13.96 1/4. But considering where we were, we're off of our overnight low right now by 27 cents. Now we have the November new crop soybeans down 12.5 at $13.50. We got as low as 12.80 on that November contract. So it's got some issues. It's got some uphill climbing to do to get out of here. Now, on the wheat market in Chicago, we're now 4 lower at 658 3/4, but that is 12 cents off of its overnight low, so it's coming back. Kansas City wheat also coming back. July is still down 7.5 cents. We're at 5.99, still under that $6 benchmark, but we're 12 cents off of its overnight low there. In the Minneapolis spring wheat trade, July currently down 5 at 757.5. There again, about 12 cents off of its overnight low. I'm going to bring in the cotton market also, and we have July now down 36 points at 84.06 per pound. December down 47 points. Okay, Chris, let's take a look at some of this information. What did you make of the rainfall? There's a big debate over did it solve all the issues or not?
Well, the rain and the weather is always just a function of it. So we know that as it rains a little bit more, we get a little bit better, and as it doesn't. But there's probably another situation that is at play here now, and that is what the Federal Reserve did last week. That is when they made the restored a store value back to the dollar, that began to put the dollar increase significantly higher and began to work on our export ability. But I think what we take from it is that we have a recognition of inflation. Inflation is here. And so what we're really doing is by the weather is we're just kind of combating a little bit of that inflation that we're seeing in the corn market, and maybe it changes some, but the overall aspect of it is China continues to buy our U.S. grains. We do have some drought areas out there, and we are in an inflationary time frame with quite a bit of demand and money supply available.
So connect the dots, if you would.
Okay.
If we get into inflation, what does that do with our export potential?
Well, we're already into inflation, and I think it continues on as hot as what it has been. The U.S. dollar exchange rate that we see will whatever percentages that it is compared to the price increase or decrease to the crop, we'll see balances and imbalances between the two. But I think as you see, we continue to raise the dollar. That's going to tell us we have more and more inflation, and those signals of inflation should be telling us to watch out more for inflation than to not to.
How does our inflation compare to South America, for example?
Well, their inflation is rampant because of all the currency issues that they've got there. So they have rampant inflation over there already. But they've got some of the driest and the poorest corn crop that they've had. So that's one of the reasons Brazil opened their door to GMO corn from the U.S. 2 weeks ago, is because they need the corn. That's what the aspect of it is the reason they're doing these factors to try to make the price go down is because the price wants to go up.
Yeah. What a weird year. It really is to have a situation like that. All right, we're going to come back in a moment, and we'll take another look at our livestock trade, see what's going on from the perspective of Chris Swift when we come back. Our guest is Chris Swift of Swift Trading in Nashville, and let's take a look at our live cattle board here this morning. We were higher last Friday when we headed into the weekend, and now we are lower. We have the, Chris, what do you go with? August here?
August, yeah.
August would be down 80 cents at 120.75. And you have October now down 80 cents. In fact, December is also down 80. You don't see that very often. They were all the same there for a moment. October now at 126.15. So pressure in the live cattle. What about feeder cattle? This one, they really took the wind out of the sails on Friday, and we're really having more weak trading today. Now August is down $1.15, Chris. Now down $1.10 at 153.92, and you have September down 82 at 156.40. What does that mean when you have the nearbys showing more weakness than you do in deferreds in the feeders?
Well, right now you're looking for convergence of basis. The feeder cattle index is about $14 lower than what that price is, so that's the reason you're seeing August move, because it is the closest one to expiration, and it will have to converge to the feeder cattle index.
You were talking to me during the break about something going on with cash cattle movement, and it could be impacting the market as well. What's going on?
It's drought. We're having to move some drought. We noticed a sale in Rigby, North Dakota this morning. It's 1,000+ pairs, and it's due to drought. So we are unfortunately not increasing our processing capabilities fast enough, and we are unfortunately having to increase our need to slaughter. We've got more cows coming into the slaughter mix. We're going to probably place more heifers into that slaughter mix. And so going forward, where we thought we might have seen a downturn after the second half of the year in placements, it looks like the drought's going to keep pushing those cattle on feed.
So how much of that do you see coming yet?
I think quite a bit. They hadn't broke the drought yet, and every single week, seemingly, the drought encroaches further and further to the east. So I don't see much drought-breaking rains in there anyway that's going to help that.
And the wholesale beef trade was down quite a bit again Friday.
Yeah, we're losing our quick beef eating season. If you're going to get product on the shelf before the 4th of July, it needs to go out today and tomorrow, one of the two.
Wow.
So.
Wholesale beef cuts that we had last Friday on the choice cuts, they were down over $2. Almost $3 lower at $323.28. We were looking here compared to a week ago. They were about $14 off of that. Selects were down $3.63, and they are actually $22 off of their price from a week ago on the selects. Let's look at our lean hog trade and our quotes provided by Bar Chart. Right now on lean hogs, you have the August contract down $2.42 at 104.25. Look at that high, 107.20. They gave up a lot of ground here today in the lean hogs again. What does that mean?
Well, I think a lot of it is China has noted that they are back up to almost 100% of their hog population now, their breeding aspects. So that in a combination with, again, what the Fed did last week by hampering the exchange rate on there, beef and pork are both just as well impacted as grains are when we go to export product out of the U.S.
Chris, good to have you come in.
Thank you very much, Marlin. Appreciate it.
Chris Swift of Swift Trading in Nashville. Janet, back to you.